Hi, welcome to insidetracks.co.uk. We've been looking to help people trade smarter on Betfair for quite a few years now. We have a website, a newsletter, and lots of goodies like YouTube channel with 100 videos, etc. So we've been doing this some time, and sometimes I forget that there are new people in, people just starting out. I always give people some kind of view as that they know something about Betfair. But even if you do know something about Betfair, even if you've been doing a bit of trading yourself, I think it's good really to go back and just make sure that you've got the basics covered. So this is a video that I've put together, which is looking at Betfair Trading, a beginner's guide. And just looking at the bare essentials, the things that you absolutely really do need to know before you start trading Betfair. Because if you don't, you will make mistakes. And Betfair is an exchange. And on an exchange, you are trying to get your bet matched by somebody else on that exchange. And if you are not as good or knowing, it's like a battle. It's like going into a boxing ring. If you have not trained and if you don't know the rules, you will get beaten, and your bets will be taken off you, and you will lose money. So here's some basic training. I'm going to go through really some of the real basics, like what is Betfair, what's a back bet, what's a lay bet. I'm going to go through all the essential elements that you have been scared to ask about. What's a steamer? What's a drifter? All these types of little things that you probably see people banding around. You go, what the hell are they talking about? I will go through step by step to help you. So the first one basically is, what is Betfair? I've mentioned it's an exchange. It's rather like the stock exchange. Someone is selling you a stock at a certain price, and you're paying for that share at a certain price. The fact that this is a back or a lay bet is beyond really talking about it. Just think of it as a transaction. I want to back this horse, and I'm prepared to back it at 3-1. And you are prepared to take my money and to give me 3-1 odds. So it's called, we're like buyers and sellers. I want to sell you a lay bet and you want to buy a back bet. That is how it works. It's good because the idea is to get your bid match. So whether you think that something's going to win or lose, you can make a bet. Unlike sports books, and unlike being on the racetrack where you can only back a horse, you can't what they call lay a horse, and you can't take money and say, yes, I'm prepared to take your money, and if it wins, I will pay you out, and if it loses, you get paid out. Well, no, that was always the territory of bookmakers and not of the general punter. So that's what Betfair is an exchange. So what's it good for? What's it good for is getting better prices, actually, because it's an exchange. It's rather like the barman at the bar saying, I'll take your money. You want to back £5 on this outcome, and you want to lay it the same odds. I'll take both of your £5 notes. When we find out what the result is, I'll give all the money to whoever's won. So Betfair is like your barman. He's just holding the money. They're just an exchange. It's where you go and buy and sell. They're not making up a book. They're not taking a profit. They're taking a commission. Like the barman might say, well, yeah, great, I'll take your £5 and I'll take your £5. And by the way, the winner will get £9.80 and I'll keep 20p. That's how Betfair works. Sports books, on the other hand, they go, oh, you want to back this horse? Fine, I'll take your money. I'll give you bad odds. And then you want to back another horse? I'll give you bad odds on that as well, and I'll take my profit, which is somewhere around about 20%. And that's what a sports book is. So, therefore, Betfair is great because you can lay as well as back, and you can carry out different strategies. Therefore, because of that capability, you can carry out different strategies going either before the race goes off or when the race goes in play. The final thing that an exchange like Betfair can do for you is that it allows you to cash out or trade out. Now, I know bookmakers and sports books are allowing you to cash out, but you can also trade out here because, again, you can lay off any winnings at certain odds that you want to lay them off at, and probably get a better cash out than you would from a normal bookmaker. So the basics of Betfair are that we can back a horse, and if we want to back a horse, we're not looking to the bookmaker to give us those odds and take our money and pay us out. We're looking for another person on the exchange, just like us, who is prepared to lay that bet, and then we have in what's called a match bet. And we are allowed on Betfair to back or lay, and so we can back at one price and then lay that bet off at a lower price and make some money as the difference. So how does it actually work in practice? Let's have a quick look. So here we have a Betfair account. You can see that this is my account. And you can see that I'm in the 550 at Chelmsford. And here we have on this side, the blue and the two to the left are the odds and the amounts of money being offered up by people on the exchange at those odds. So we've got someone out there who is prepared to lay Cola Empire at 2.46 for £19. And £19, well, it might be 19 people a pound, or it could be some other number. But basically, there's £19, there's £15 to be matched. If you want to back it at 2.46, you've got £15 worth of somebody else's money that is prepared to lay you off at that price. Okay, so that number changes as people come in and say, look, I want to do 2.46. So if I actually come in and say that, okay, so let me just do that then. 2.46 I want to do. So I'm prepared to lay Cola Empire at 2.46. That's me saying, hey guys, anybody out there want to match me? If I place that bet, what you see is that went up £5. Maybe you did, maybe you didn't see it, but it went up £5. So basically that would be, and it's just gone down £5, 49 to 44. So so basically, if I want to do it, I can, and you'll see that my money, if I'm laying, will come in here. If I am backing, then I can add money in here. So I could go 2.5. That £5. If I press that place, that would go up to 21, but actually it's moved. So if I do 2.52, then we see that my £5 will go in there. So that's me wanting to back it. And if I wanted to just get on with it and back it straight away, then I go 2.5 because I've got people already on the exchange who, and there's £10 there. That would be immediately matched. I'd be immediately matched at 2.5 because there it is. It wouldn't now because it's gone, but it would have been if I pressed place then. So I can immediately get matched at this. I can say, well, actually, I don't like 2.46. I want 2.5. So I'll go 2.5 and I'll come in here. And then I'll need that price to move that way in order to get 2.5. And it depends what you think is the value. Either you think this horse is going to go one left. In other words, it's going to shorten, or you think it's going to go right. Now, what will tell you a little bit about where it's going to go is to click on the charts here, and each individual horse has a chart. And if you click on that, up will come the chart, and it'll tell you that 2.52 is pretty low down from where this horse has been. It's been 3. It's come down from 3 to 2.5. just below 2.5. We reckon 2.35 down here. 2.35 will have been the lowest it's got to. So really, 2.5 is the bottom, isn't it? So that's the valley, isn't it? So it's the lowest it's gone. Then it's come back out to 3 again, and then more money's come in for it, and it's gone back down to 2.5. And what you see, why are these changes happening? Well, you can see that some money came in here. So that money here, which is £200 odd, came in here and pushed the price down a bit because that was obviously a back bet. And then here, more like £250 came in here and pushed it out. So we've got people here who think it's going to win, and we've got people here who think it's going to lose. And in between, you've got people who haven't got too much idea and are following the flow a bit. That's really what this chart is telling you. And it's telling you that 2.5 is quite low. So if you ask me which way this horse is liable to wind up, Betfair is telling you 2.34. I don't think that's right. I think this horse will probably wind up somewhere around about here at the start. It could go out to 3. It could possibly, in the last 10 minutes, when most of the money comes on, go down again. I feel that's unlikely because there's enough money coming here to say, actually, we think this is the floor. And that's what I would say to you about charts, is that you need to look at the floor. Now, the floor is around about 2.5, just under. And you want to look at the ceiling, which is here around about 3. So somewhere between 2.5 and 3 is where it's trading at the moment. And that's called the corridor of trading. Between 2.5 and 3 is pretty much the corridor for this particular horse. So what you see there in that chart tells you a little bit about whether this price here is value, and whether and I can't tell you which way it's going to go. It could go down to 2, quite possible. In the last 10 minutes, everybody starts backing, it goes down to 2. But the chart tends to tell me that there's a corridor, and this is the bottom of the corridor, and therefore it's likely that this horse will trade higher before the off, and therefore 2.46 is not value in terms of backing. It might be value in terms of laying, if you believe that that's going to drift out again. So basically, backing is here and this side, and what you can see is the amount of money available to you from people who are prepared to lay this horse at 2.46, £111. At 2.44, there's 44. At 2.42, there's 167. So you can see there's some orders in there. Yeah. And on this side, there's £72 at 2.5, 56 at 2.52, and 56 at 2.54. In fact, that number there, if you add those 3 numbers there, that's about 300, about, yeah, 260, about £300. Here it's about 170. So there's more orders to lay than there are to back. When that happens, we talk about the weight of orders, or the order flow is pushing that way out. So again, the order flow tends to tell you that this horse is liable to trade higher going forward. So that's just a little bit of the basics there, and I'll go back to So we talked about back bets and lay bets, and now I'm going to talk to you about some terminology: the steamers and the drifters. As we've just seen on the chart, if there's enough money pushing a horse one way or another, so if a horse is being backed and it's being continuously backed and it keeps coming in and coming in and coming in, so say it starts at, say, 5, and money keeps coming in for the horse, more and more people are prepared to back the horse at lower and lower odds, then the horse will go 5, 4, 3, 2, etc., and he'll come in and come in and come in. That is called a steamer. Those horses, generally speaking, are backed in the morning by their connections. Then some punters come on and see that there's some movement in the price. They will then jump on the bandwagon. And then steamers actually are horses that wind up still shortening when significant professional money comes in. So so that's what basically it's there for. So you now know steamers are the ones that are coming in. They're the popular ones that everybody wants to back, and drifters are the ones that nobody wants to back, or have no friends in the market, and that's when you'll hear the term drifter. The next basic concept here is looking at overweighted and underweighted horses, and I'm just going to go into that in a bit more detail by showing you some of the different horses that I've got that might demonstrate this to you. So we're back at Chelmsford. It's the 625, and we're going to have a quick look at overweighted and underweighted horses. Now, how you do this is you go into the chart. So here's the chart for Thomas Aquinas, and we want to see whether this move here has got a lot of money behind it, or it's normal. So you work out overweighted and underweighted horses. Quite simple. You take the last price matched, which is 3.7, and you times it by money on this selection here, which is about 6,000. So we say, let's say 4 times 6 is 24, slightly less than that. So we would say that that's about right. Somewhere around 24,000 is about right, slightly lower than 24,000. So basically, yes, this is an even weighted horse, and therefore we can say pretty much that this movement here is valid. It's got support in the marketplace, and you know, here we go. It's getting more money coming through because 6 now, just over 6 times 4 is 24. So we're talking about a well-backed, evenly weighted horse. That's called steaming. 5 through till 3.5 is a steamer. So it'd be even more of a steamer. It keeps coming in, which it is. So this is a well-backed horse. And Thomas Aquinas, you would feel, has got a very good chance of winning based on the fact that there is a lot of support for this horse. Now, if we look at some others, we look at Wooder's Dream, and we can see here that 5.3 times 6 is over 30, isn't it? 6 times 5 is 30, plus 0.3 times 6 is 2, so it's 32. 32 is where it should be. So this is an overweighted horse, and this movement out is therefore quite solid, because overweighted horses in the marketplace don't move as much. It's rather like looking at a small river craft, like a sailing ship, and an oil tanker. If a horse is very underweighted, it can be going in one direction. It can be coming in, it can be going out, but it's liable that it's a decent amount of money coming in will move that little tiny sailing ship off course and back into a different direction. So it's like the wind blowing, and the little sailing ship will basically move direction. If you're overweighted or highly overweighted, and when we say highly overweighted, it means that this number would be much more. You'd be saying that it's well above 27, significantly so, but it is pretty overweighted, this horse. Then this movement going outwards is backed, and it's solid, and it's like an oil tanker. It's moving out, therefore it's unlikely to be changed very easily. So you can expect this trend outwards to continue. So that's what overweighted and underweighted horses are. So knowing that a horse is over or underweighted is very important for you to understand when you're looking at these charts which way they are likely to go. This horse here is overweighted. It's on an outward trajectory. It is likely that this horse will not come back in very easily, and it will need significant amounts of money to start bringing it in. And you're still seeing it going out even as I speak. So this horse is liable to be 5.3. It's at a higher 5.5, so it's liable to go probably beyond 5.5 in my opinion. Probably now 5.4, and wouldn't surprise me if I look in half an hour's time that it's not out somewhere around about 6. So I can read this chart and say it's overweighted. This direction is correct. It's like an oil tanker. It's going to be very difficult to change that direction. Having said that, there's only 31,000 on the whole race at the moment, and there's going to be 300,000 by the time all the professional money comes in. So it is possible that if the professional money comes in and it's around about 10 minutes before the race, that it could be brought back into, say, 4-ish, possibly. And that would be as a result of fresh money saying no, that's far too big a price. But I would expect that to not happen, but it might happen. On the other hand, Thomas Aquinas, who we've seen is a steamer coming in. Is he going well? Yes, he is. It's nearly £10,000 at 3.45, which would be even money still. So this is a fairly straightforward move. It's evenly weighted, so therefore you shouldn't necessarily see easy movements in this. And you're seeing this little movement, which is quite characteristic of overweighted and evenly weighted horses. If we go down to, say, this particular horse, this is a big steamer coming in from a high of 38. It's now down to 6.2. It's got 6.2 times 6, which is 36, evenly weighted. Again, a very solid movement there, and I wouldn't necessarily expect this horse to be going out too much. Sometimes what happens is, particularly with big steamers like this, where you've got some money that's come on at significantly higher prices than the current price, you'll see some profit taking. So this particular chart might do a little upward curve as some of these guys who have come on 20 start taking some money out, some profit out at the 6.2 or 6 level. But it's a solid move, that, and it's not one that's going to be going back out to 20 anytime soon. Because it's evenly weighted, and it's got a good support. The other hand, this particular fella, 10s times 2,300 should be 23,000. 23,000, very underweighted, means there's little money, little support. You can see that the actual peaks and troughs are very much higher. That happens because it's a bigger price, but also because it's an underweighted horse. So you'll see more movement and more volatility with this horse. That movement out there could change, unlikely to again, as in my opinion. But you just need a big bet to come in to bring that back down. So this is a lightly weighted horse, as you can see, 23,000. It's now 36. It's well underweighted, so there's not a lot of money going on this, but any money that's coming on it is negative money. But it wouldn't take much to turn that round and bring it back down to, say, 8. So if you're going to get in and say start laying or whatever this horse at, say, 11.5, you might get stung because £200-300 comes in and it's supportive. It will bring it back down to 8. So be careful with horses like this. If you take up a position with big liability, you could get stung. So this is the way in which you can find out and start testing your theories about which way the market is going to go for a horse, and that leads you to certain strategies, which I'm going to talk about in a minute. Next to talk about is ticks, points, and crossovers. This is quite an important feature, and I'll just go into that again on the same particular chart. So if you look at this Thomas Aquinas, a tick is the difference between these two. So a tick is 3.6 to 3.65, which is 0.05. A tick between 5.3 and 5.4 is 0.1. A tick between 6 and 6.2 is 0.2, and so on. 10 and 10.5 is 0.5. And there are crossover points. And in fact, these are showing you the crossover points pretty well for the top ones, which is at 10. So you've got 9.9 you can have, 9.8 you can have, and 10. So there's 0.2 below that. And then when you go down to 6, you go down to 5.9. So the 0.1s finish at 6, the 0.2s finish at 10, and then the 5s finish at 0.5s finish at 20. and so on. And these are called crossover points. Crossover points. This is a crossover point here. 6.2 to 6, and then you go down to 5.9. So if I do a strategy, which is to say lay at 6.2, lay at 6 and back at 6.2, I will get 0.2 as a tick. But if I do it 5.9 to 6, then I only get 0.1. So a tick is very important, and a crossover where it changes from 0.1 to 0.2 or from 0.2 to 0.5 are very important because these are where, in fact, some of your strategies like scalping can give you higher rewards if you find the right horses and the right prices. So a tick is depends on the price and varies, and you can look that up in Betfair and see that going back to say 2, you go down to 1.99, but above 2 you go to 2.02, and so on. So you get these crossover points where it's very good for certain strategies where you get double reward for a tick going in your favor versus just below that crossover point where you get half the amount. So that's really worthwhile knowing, and when you're doing things like scalping, it's very important thing to notice. A point is 6 to 7. People can talk about points, and as I've just told you about, the crossover points are probably the most important thing in that whole thing. So we talked about ticks and points and crossovers, and now we're going to talk about what matters when you're talking about doing your trading. One of the things that people talk about is return on investment. So if I have a trade where my stake is 2, and the trade comes off, and I wind up with 3, then I've had a return on investment of 50%. Half my stake, or half what I bet or traded, has come back to me in profit, and that's a return on investment. So if people talk to you about return on investment, there are certain strategies that give us a very small return on investment for very small risk. Others give you a higher return on investment for higher risk, and that's how you work out what sort of strategy you want to go into. Is it a low risk strategy or a higher risk strategy? And if you are going to go for high risk strategies where the return on investment are quite high, then you will need to have an edge. You'll need to know something that others don't, because they don't give up very much on the exchanges for nothing. So my advice to anybody coming new is to choose strategies which have a low risk but potentially low return on investment. Bank, what sort of bank do you need? Well, it's quite useful if you're very new to trading. You can build a bank by going and signing up with bookmakers and taking advantage of the free bets and turn it into cash. I give full ways of doing that on the website, but it's very straightforward. You sign up, you make the wager that will give you the free bet at minimum loss. So you get a free bet for virtually nothing, and then when you've got the free bet, you turn it into cash using Betfair. So it's very easy, and you can build a bank that way. You can build a £200 bank very, very simply if you're a newcomer, by taking advantage of, say, 5 or 6 decent new customer free bet offers. Profit is about what you wind up at the end of the month, free of everything. It's got nothing to do with the return on investment. It's got to do with, if I had £100 at the beginning of the month and I have £200 at the end of the month, I have £100 profit. That's just straightforward profit. So don't get confused about return on investment. Return on investment could be £2 to £3, which is 50% return on investment, but only £1 profit, as opposed to you've had trades of £1,000, but you only wind up with, say, £10 profit. Then you only go a very small return on investment, but you've still got £10, which is more profit than the £1. So don't get confused about people talking about profit and return on investment and so on. Return on investment is about risk, and profit is about actual money in the bank going forwards. And bank, you probably need £200 to £300 to start off with in your bank. I wouldn't go with much more than that. and I'd certainly make sure that I was prepared to lose that money, because when you start, you often make quite bad mistakes. So next, we need to talk about what strategies are there, and most strategies can be broken down to pre-race or in-play. Pre-race strategies include scalping. Scalping is one that I want to talk about in probably quite a lot of detail. I'll talk about order flows as well. Support levels I'll talk about, follow the money, and then I'll make a quick reference to Dutching in a minute. So let's go back to the charts. So we're going to talk about scalping first. And scalping is a very straightforward activity. I want to get 1 tick profit. I want to choose my stake. I can choose £2, £5. I can choose whatever my stake is, but that's up to you and what your limits are and what your attitude to risk. What I want to do is I want to get a back bet at 3.75, and I want to get a lay bet at 3.7. So I go back bet 3.75. I would do a bit more than this. I would start saying, is this the right place to get in and the right place to get out? But I'm just going to show you how to do scalp. So basically, it's very straightforward. I have now going to make myself, if this back and lay bet turn out to be okay, which I haven't done a lot of research into it, but 132 here. So I've got my lay bet off. So I'm hoping that that's going to go back up to 3.75, and I'm going to get my back bet off, but I don't know. I haven't done that research, but that's what I'm looking forward to do next. So I won't get heavily into it. It looks as if it's going in rather than out. So looks like I won't get my scalp, and this is probably good for you. If I'd done the back bit first and then waited for it to be matched, that's probably the best way of doing it. I was trying to show you quickly what the way to go was. I should really have another look at this and see where it's going, because it was coming in. Yeah, it was it's coming back out again. It's doing that nice little turn. So I could expect this to come back out to 3.75. So I'm not going to get too worried about it. It is coming back in again. So what you're trying to do is to get it laid at 1 tick difference. And as I've just explained, you need to look at the charts really before and see where it's going, and see where you think it might be winding up, and then try and put your, generally speaking, I go for a back bet first, but depending on what direction, if it's going in, you want to put your back bet on first, and get your lay bet done next. If it's going out, you want to get your lay bet sorted and take your back bet afterwards. So depending on the direction and what you think is going to happen, then you go for it. Okay. So that's scalping, and scalping around about the crossover points is the most profitable. Know something about the horse. I'm not really into this particular race. I haven't done the full research on it. I know Thomas Aquinas was quite well fancied this morning. I know that Woodard's Dream is from Michael Appleby, who won last time out, but has been going out. So I know a bit about this race, but if I was going to scalp it, I'd be much more focused, and I'd probably also be using some kind of software rather than just using the Betfair trading thing. But that's what you're trying to do, trying to get that Thomas Aquinas lay bet on, which I have done. Now, let's see if we get 3.75. Hopefully we will, and we'll get 25p. There you go. So I just got, ultimately, a free 25p bet on Thomas Aquinas. If it wins, I'll get 25p. There you go. How difficult was that? Even I wasn't bothered when it went in, because I knew I'd probably get that bet away looking at the chart. If I want to, I can do that. Cash out. I've now got 9p for Thomas Aquinas if he wins. But if any one of the rest wins, I get 6p. So I'm 6p, at least 6p, better off than I was how many seconds ago? A few seconds ago. And if I keep repeating that process, what I probably do now is 3.7, 3.65, 3.7, 3.65. And I just sit there and I would just keep repeating that. Each time I'm getting 25p, or if you like, 6p. And if I do that 20 times, I will, with my £5 stake, I will have £1.20 in the bank. And that's the way scalping works. Very simple. Do it intelligently. Sometimes you can do it 2 ticks if you want. Sometimes if you do it the crossover, you're going to get more. So it's not simple, but it's pretty simple. Yeah, as I said, 6p better off, and I'm not really focusing on it or worrying about it or in my trading mode. So that's the first one. Now we're going to want to look at order flows, and I've explained this before slightly in the beginning, but these are the orders. These are the orders stacking up, and if the flow of those orders is such, so what I do is I add up that 800, add up that 700, pretty even. So it means that, it means that it's going to stick around about this price. It's going to stick somewhere in this sort of 3.5, 3.6. The orders aren't imbalanced in any way, and it seems that it's going down a bit. This order has gone down a bit, so these orders have been taken, these orders aren't. So the flow of orders tends to tell me that 3.6 is probably 3.55 you're going to get to. This is going down. No, it's gone up, down. Yeah, 3.55 we did get to. So it tells you whereabouts you're liable to wind up. 41 is low, 241 is high. So it's going to go backwards and forwards, backwards and forwards. Now, you need to have a bit of experience with order flows, because there are people out there putting big money into a position, and then cancelling the order, and so you think the orders are there and then they go. So actually it shifts, but you can see as these numbers go down to sort of the 20s and so on into the 2 figures and then single figures, that price is going to move in that favor. So either of these 2 numbers now go down into the double figures or single figures, then it's going to move that way. So if there's a single figure here, it's going to move that way. A single figure here, it's going to move that way. And you look out for big numbers. So if that was 1,000, I'd be thinking about it. So that's double numbers, so it's going to go back into 3.7, but it's building up again, so it's not. So you've got to keep looking, and it's a feel, it's a touch, it's a feel, but you can get the hang of order flows, and you can get the hang of how they're doing. Combine it with looking at the charts, and you can then start working out which way it's going to go, and which way the market's going to drift or come in. So that's order flows, and then support levels. If we look at the support levels, for instance, for this particular horse, so support levels aren't there. Let me just have a quick look at this one, because this one seemed to have support levels, I thought, last time I looked at it. Yeah, well, not really. What you're looking for with support levels is horses that are backed at a certain price, and well, you'd say there's support levels here. Okay, let's take this one. It's very crude support levels, but they're there. So 8 appears to be a support level. If it goes very much below 8, then money comes in for it, and money goes away from it. No one wants to support it. That's the low, yeah. Then it goes out to 10.5, 11, and at that point, there's punters out there going 11. That's a good price. I like 11. Thanks very much. I'll have some of that. And it comes back in, and then it gets to 8, and they go, oh no, 8's too short. I'm gonna send this back out, and I'll go back out, and perhaps it can go back out to 10. So these are kind of what you're looking for. Often these support levels aren't as big as this, not 3 points. Often they are, and particularly towards when the money starts building up and it's getting towards the race time, the support levels could be very much thinner. So I could expect this horse, for instance, to be 9 and 8. That's kind of what I expect. So this one maybe goes out to 9, then comes back into 8, then goes down to 9. So these are the support levels. You can use those, get used to it, and see how it works, and don't use it too early, because if there's not enough money on it, you can't really see it develop. But as the race gets closer, so you'll start seeing the support levels coming in, and you can start saying, okay, gets down to 8, I'm going to lay it. Gets up to 10, I'm going to back it. And I prefer starting off with the backing level and then coming down rather than going at the laying level, because if this breaks out, and that's what it's called a breakout, when the support levels are broken. So if this goes down to, say, 7.8 or something like that, so if this came down here to 7, for instance, that would be a breakout from its normal trading parameters. And a breakout is worth knowing about, because that's the other strategy you can use. You can wait, rather than trading this in between its support levels, you can wait for this horse to break out from its support level. So in other words, it either does that, or it goes boom, out the other way and goes above 11.5. If it breaks out from its supports, then you can follow that money until it finds a new support level. So say this one went down to, say, 7, you can say, right, I'm going to back it. It goes down to 6, back it, and then it then decides it's another support level. It starts going back up, and you'll make money then, because you'll see it turn, and you can make money. So these are the strategies you could use. Pre-race, scalping is often a strategy that people like, yeah, it's a good strategy. It gives you little bits of money at relatively low risk. So that's your pre-race, and now I'll look more at. So before we go to the in-play, just mentioning things like Dutching. I wouldn't really get into it, but Dutching is where you choose more than one horse because you believe that there are certain horses that haven't got any chance. So you just basically are saying this group of horses are going to beat that group of horses, and it just gives you slightly less risk. In-play strategies. My favorite, and one that I look to say to other people to follow, is back delays. I like back delays because back delays say, and I'll give you the whole theory behind back delay, is you back it at the price it goes off at, which is the price that is the value in the market. So when a horse goes off an exchange, whatever price it goes off at is the sum total of everybody's knowledge. So it's the sum total of the punters, the connections, the professionals. That price is the right price. No matter what anybody thinks is the right price. It is value. Now, what you're looking for in a back delay is a way of saying, well, actually, it's value with all the normal things thought of, but I know that this horse likes to go out in front. I know that it's in a good draw. I know that the jockey is a good one. I know that the trainer is in form. And so, and I know that the horse likes Chester or wherever it happens to be. So I'm now going to say, actually, I have an edge because there's more, I know more than other punters on the exchange. A significant number of them, I know more than they do. And at that point, I'm going to say that with these other factors taken into account, the price that the horse goes off at is a good one. So you can have a horse going off at 10, and you know that it's well drawn, a quick horse. It's coming out, and it's going to come out and it's going to lead. Now, with back delays, the whole point here is that you're going to lay it in play. So you're going to expect it to come down in price when it goes in running, because it's going to be out in front and so on. So it's going to get itself into a position where people think, oh, when it was in the stalls, its chance of winning was 10. Now it's out in front, 5 lengths in lead. Its chance of winning is a lot higher, when in fact, it probably isn't. So the in-play backers, the in-play exchange players are going, oh, it's got more of a chance, so its price comes down. You then layer that lower price and take the profit. And then you don't care. You don't care whether it wins or not. You couldn't give a hoot because you made your money. And actually, I've got a lot of back delays that shoot out in front or whatever, do something that I know is going to happen. Halve in price, only to then finish last. but I don't care. I've made my money. It's similar with scalping in play. Scalping in play is, I've done videos on scalping in play, and scalping in play is very straightforward. The movement of a price in play is very much higher than in pre-race. You've seen in pre-race, if a horse moves from 3.65 to 3.85, it takes quite a long time. But actually, when you go in play, that movement can be almost instantaneous, up and down. So the volatility happens much more. And if nothing has happened in the race, i.e. the horse hasn't fallen over or got stuck in the stalls or fallen, had some mishap, if everything's normal, things happen normally, then a change in price is not sensible, because nothing's changed really to the chance of that horse winning or losing. So scalping in play can be very interesting, but you need to be very careful as a beginner, and you need to know what you're doing, and you need to know what race is. So do please look at videos about it. I've done a couple that would help you. Photo finishes are another one. Some people actually only do photo finishes. They watch every race, and when the photo finish comes, they have big screens and they stop the race on the line, and they know pretty much who's won. They even have people on course taking photographs and sending through the results. So photo finishes is something you can do if you are good at that. It is quite an interesting thing to do. Be very, very careful though. On some race courses, the angle of the camera can give you major shocks. I've done a video on that as well. So these are the strategies you can do, and it's down to you, your attitude towards risk, and what you want to do. But my two strategies that I would definitely recommend to you is scalping with relatively small stakes to begin with, looking to get just a tick or two with each trade, and back to lays. And I would recommend that you sign up to the newsletter, where I give my opinions about the best back to lays of the day, both from a conclusion that I have having analysed the race, or from a statistical probability that the horse will trade lower in running, both of which are profitable. So sign up and you can try the newsletter 14 days, and you'll get other recommendations for best trading bets of the day, etc. So you'll have quite a lot of help in terms of what to choose and how to choose it. My recommendation to you: start off small, even practice. You don't have to use real money. You can go into play without using money on Betfair, and that's that practice mode. So you can do that. But whatever you do is choose initially small stakes, choose strategies with low risk and relatively low return on investment. Then what I would suggest you do is to watch some videos. We call it Betfair Academy, 100 videos. You can look at any one strategy that you particularly pick and get more information and support. Definitely get to know your charts. And at the start, don't get yourself heavily involved with software. Software can be very confusing and mean that you actually waste money, and not only on the subscriptions to those that software, but also doing it wrong and actually finding yourself in a bit of trouble because you've clicked the wrong button and found out that you've made a bet that you didn't want to make. So that's my advice. Start small, practice, keep a score, make sure you know what you're doing and what's working, what's not working for you. Some people are very good at scalping, some people are not good. Some people are good at back to lace, some people are not. Some people are good at other things. So just work out what you are going to be good at. And if you like this video, please like it, subscribe, and I'll see you on the next one.